Welcome back to Chartbusters. Well, the markets are trading with a tinge of red in today's trading session. The mid-cap index as well has moved into the red, and now you have more number of stocks that are declining in comparison to the number of stocks that are advancing. So the crisscross lines as well should come up for you on the screen. But it was a pretty good showing from Arvind Fashions in the past quarter. The company recorded its highest ever quarterly run rate, with revenues growing by close to around 30%. That's in comparison to pre-COVID levels. Mr. Shailesh Chaturvedi, the MD and CEO of Arvind Fashion, joins us. Hi, Shailesh. Morning. Thanks so much for joining in. Well, it's been a good showing. I think the unlocked trade is playing out. People are shopping big time, which is good for your business. But give us a couple of numbers. I recall that you all had guided that you all will grow by 15% in comparison to pre-COVID levels in FY23. Now, given that you've done 2,100 in the first half of the year, should you be ending the second half, with a similar run rate? That would end at around 4,200 crores. Is that a fair number? And margins, can it hold at these high single digits of around 9.5 to around 10%?
We've had a good season. We are very happy with our, execution in the market, the sell-through, lowering of discount. Our revenue at 1,200 crores is the highest ever, and has grown really well at around 45%, and like you said, 32% over the pre-COVID time. So markets are buoyant, and our brand portfolio is very, very strong. So it's all leading to good sort of scale momentum going forward.
Lovely. Shailesh, we have some of those details. What we're trying to get out of you is what's the way ahead? Second half of the year is going to be better. Can you end at more than 4,200 crores? And can you maintain these margins or better? Go ahead.
So these kind of numbers, 4,000 plus crore, it's quite possible. We have a good scale momentum right now. It's very likely that we will hit those numbers that you mentioned in terms of the scale. Margins have been improving. If you look at last 4 quarters, quarter by quarter, sequentially, and also over last year, our margins have grown. This quarter also over last year, margins have grown between 2.5% to 3%. So we see that trajectory continuing going forward in the second half also.
All right, we take that point. Now, just, above 4,000 crores, just wanted to understand, because the numbers that you've reported are the second quarter numbers. What you haven't reported and what we've seen is the kind of festive season demand that there was. Can you give us a sense of how festive season in this fiscal was versus, say, a normalized festive season?
So we are very happy with the way the festival season gone as per our plan. And if I look at this season, fall holiday season, our sell-through continue to be very good. So we are very happy with the way this season is going. And the next, we're looking forward to the weddings and the winter wear season, and the season will end in December. So on plan, the season is going as per plan.
Okay, give me two numbers, Shailesh. One, just wanted to understand, you said that you've recorded a full price sell-through across the brand versus discounted. That increased your margins. What proportion of your sales came in at full price, and how much of that was discounted? What was the proportion of that discount? Is that likely to sustain going ahead?
So, if you look at last 2 seasons, we've delivered, good full price sell-through. In our industry, good full price sell-through will be close to 55% to 60% in that zone, where you sell full price and the remaining goods are discounted. So we are on track to beat our plan on similar numbers, Mangalam.
Okay, all right. Shailesh, I wanted to ask you about the other income. For the past quarter, it was around 20 crores. That compares with 2 crores in the previous quarter. And on a year-on-year basis, it compares with around 15 crores. But that was with rent concession. So this time around, it's without. So explain that to us. Why is it 20 crores? It's an elevated number.
Yeah, so this is basically the Ind AS treatment on the rent saving. So this is a accounting process. So there's nothing, unique to that. There's no transaction there, Rijal.
All right. If you could give us a sense of online. I mean, last year you crossed about 1,000 crores in terms of online sales. At the halfway mark, where does that number stand? You had again guided for, a 10% faster growth online as against offline. What's your target for this year?
So online continues to be a very dominant channel for us. So if I look at from COVID days, we've grown at a more than 20% CAGR. In this quarter also, online is among the highest revenue quarter for us. And it's at 26% of the revenue mix for us. So it's a strong channel, and our target is to grow at more than 20%. So we are going really well on that. We are market leader in the online business in our industry. And now the focus is shifting towards even more omni linkages. So we've added 300 more stores with omni linkages in this quarter two. Also, wherever we've added omni linkages, those stores we get high single digit sales contribution coming from the omni linkages. So online continues to be a strong, and the way our brands are more casual, informal brands like US Polo or Calvin Klein or Tommy Hilfiger, they do really well on the online space, market leading in online channel.
26% of first half sales would mean that at the halfway mark, online sales would be around 520, 530 crores for you as a proportion of.
So this quarter in Q2, our monthly run rate is more than 100 crores. Okay. And, we are, looking at a business which is upward of 1,000 crore NSV in online business this year. So it continues to be a strong part of our business.
So you are on track to grow that business 25% year on year. The other thing that I wanted to know is that, how do you position Sephora against Nykaa? Because Sephora, about 200 crores in terms of run rate, profitability is pretty minuscule. But again, I mean, is there any chance of you unlocking some value out there? You had medium to long-term targets of what, 500 crores in terms of sales from here?
Sephora is very clearly positioned as a premium than the other businesses that you mentioned. Also, it's a very offline-driven global concept. So we follow the global philosophy of the brand, and we have 26 stores in the key mall in India, and women love to shop at those stores. In fact, in Q2, our like-for-like store growth of Sephora is more than 30%, among the highest for any brand. The sales density, that is sales per square foot we deliver, is among the highest in the industry for any brand in those malls. So we are very happy with the way Sephora in its own, prestige image is doing. We cannot compare with some other which are slightly lower price, little more mass appeal businesses, but we are quite on track for our game plan on Sephora.
Shailesh, we get the brand, we get the pricing. Mangalam and me, we have a very close look at these, rest assured. But is there some unlocking that you're planning? That's what we're getting at. Because shareholders, they look at your business and then they see what value is there for shareholders. So do you have some plan in mind? You're looking at scaling up this business from around the 200 crore run rate to around 500 crores. But is there an unlocking plan? Go ahead.
So we are quite engaged with Sephora to grow the way the Sephora is globally positioned as as a prestige brand in the offline space, and we'll continue to deliver that promise to our women consumers in India. So we don't have, we cannot discuss some other plan right now, but our focus is continue to run the Sephora stores.
Take your point. We will, however, closely monitor all the developments out here. Thanks a lot, Shailesh, for joining in. Target over 4,000 crores this year in terms of revenues. Run rate of 100 crore plus in online businesses with improvement in margins in the second half is what you are guiding for. The street likes that. The stock doing well. And sitting with a gain of about 2% odd. We take a short break on the